When it comes to China's support for Russia's defense industrial base, all I can tell you is I was extremely clear about our concerns in some detail, but we'll have to see what actions follow from that.
Okay, folks, so I believe it's no surprise that China intends to de-dollarize the world. At a minimum, they want to stop utilizing dollars when purchasing and selling goods. When Yellen and Blinken visited China, their fundamental message to Beijing was, if you continue selling your products to Russia, we will punish you. And I believe Yellen got her point through crystal clear. This posed a direct threat to China's commerce sector, and warning was issued on Chinese soil that if things go poorly enough, we will focus your financial institutions. And the most obvious weapon the US has is their reserve currency. The world exists, whether we like it or not, on a financial system run by the dollar system. This covers China as well. Although 90% of Beijing's trade with Russia is in local currencies, that is not true globally yet. America's ultimate weapon against banks is simple, and they can cut anyone and lose their access to US dollars. It doesn't even have to be confiscation of assets. If Yellen blocks Chinese banks and businesses from dollar transactions, it's a massive problem. We might notice costs going up. And some countries may even decouple due to US sanctions. And this is why Beijing must develop an alternative system that cannot be targeted. How do we create a platform that the United States cannot target? An avenue to facilitate trade with our partners in the event of US dollar sanctions. And guess what? They're about to bridge the gap. Hong Kong is part of China. Let us not forget that. It has officially established their Digital Yuan payment system. The platform and pilot program should keep Janet Yellen awake at night. This is the initial rollout of the Digital Yuan beyond mainland China. Beijing is rolling it out. Hong Kong is the first global financial center to use this. From there, it will spread to the rest of the world. Eventually, China's trading partners will begin using it. Russia, Saudi Arabia, Indonesia, and the BRICS will begin embracing the platform. Not really because they adore China, but because it is an alternative system away from the US dollar. The more countries stop using the dollar, that deprives the US of their strongest economic weapon, the power of financial sanctions. The power to stop transactions whenever they want. Brazil is already trading in China's local currency, the yuan. The effect comes when Yellen has less power to sanction the pilot program over the world. The more people in Hong Kong open digital yuan wallets, more major Chinese banks will transact in the CBDC. This enables buyers to pay merchants in mainland China directly. Bank of China is among those included, an ICBC bank. And these are equivalent to Citibank and JP Morgan in the United States. China is integrating its biggest banks in the strategy, and you'll quickly understand why. There is a misconception that says Chinese banks are rural, and they are little, that their existence is limited to serving the peasants and farmers. That's not true at all. These are some of the largest institutions worldwide. S&P claims that based on total assets, the top banks are Chinese-owned. ICBC is at the top, and JP Morgan is barely in 6th place. You ought to understand the gigantic reach of these banks in China. By introducing Chinese people to the digital yuan and banks, Beijing has developed a strong move in chess versus the US dollar. It permits nations to conduct business smoothly and in using the CBDC in secret. This is the majority, and probably a system of private ledgers where the user and issuer are the only ones who know of the exchanges. It will be really challenging for outside parties like the Janet Yellen, US Treasury, will oversee who buys what or who sells it. It is merely a matter of time until nations begin to adopt the digital yuan. In particular, as we are heading into a multipolar future. China's largest bank, ICBC, just launched a branch last year in Saudi Arabia. The bank is physically located in Riyadh, which ought to indicate that bilateral transactions are taking place. A couple of several months later, MBS and China agreed an exchange of currencies totaling $7 billion or more than 50 billion yuan. Currently, Saudi Arabia possesses a substantial supply of Chinese yuan to apply. Transacting is the next action, digitally, and move it to the power source platforms such as wire transfers. And this is an effective backup plan in case both nations are subject to sanctions. Additionally, it protects the security of China's energy if dollar transactions are blocked by the US. Beijing will merely utilize the virtual currency to purchase Saudi oil, and that will be the ultimate goal. The IMF has even seen this shift. It was precipitated by the Ukraine war that grew more intense. Russia struck the match, and Beijing is merely adding gasoline to it. De-dollarization is being pushed by Beijing to the subsequent stage. The IMF notes that the change is already in motion and consequences are severe if payment currency values diverge from the US dollar in the direction of the yuan. It modifies every aspect. Naturally, central banks will have less USD or US Treasury bonds held in reserve. A pretty basic cause and effect connection. While China isn't observing as a reserve currency in place of the dollar money, they are unquestionably moving slowly, biting down on it. The value of China's currency is rising globally. Traction and the change are really noticeable. January of last year saw the yuan portion of global payments was only 1.9%. In the most recent data from March, it presently stands at almost 5%. That's a 2.5 popularity growth. It's a large increase that indicates China's expanding impact. When you're the largest trade partner to more than 100 nations, you do wield a great deal of power, and that does not even factor in the bilateral trade currently in existence. These are SWIFT system transactions. This is a platform under Western sovereignty. And this implies that China can be cut off in a conflict about the economy. As we converse, Yellen is pressuring the G7 to restrain China's expansion once more. Everything is about industrial excess capacity, and it might end in sanctions. Beijing seeks additional trade with Russia. And the biggest danger right now is that China is going to unveil the digital yuan. Hong Kong is merely an experimental area. Initially, it will be straightforward transactions. First, visitors purchasing goods, people purchasing clothing, and businesses funding international imports and machinery. But it will advance in that direction with vital trade and industry that will impact China's ability to survive. And it's already taking place in the background. China is already purchasing essential goods for their continued existence. Petrochina purchased 1 million crude oil barrels using the digital yuan. And gold isn't the only commodity being exchanged in virtual currency. Additionally, and once more, this is being carried out via Chinese banks. The Bank of China handled a $14 million transaction. They sold gold to a foreign customer. And this cross-border agreements were reached in the digital yuan. The purchaser transacted in China's CBDC, purchasing actual gold from the Shanghai Metal Trading. Also, since it's finished via a private ledger, the purchaser's identity was kept secret. It might be a nation in Southeast Asia, the Middle East, or perhaps South America. Nobody actually knows throughout Europe, including the US Treasury. This is how potent it is. The arsenal's de-dollarization. This poses a serious risk to US hegemony in the economy, and Jerome Powell, the chairman of the Fed, is aware of it. This is where China is making progress. The Fed has opted against using CBDCs right now. Powell does not have any suggestions, and he attested to this at a hearing in the Senate. Hence, at least in digital currencies, the yuan in China is booming and leaps ahead of the US currency. We are able to expect a shift in the number of transactions from SWIFT in the direction of this platform. Right now, the terrifying thing is how simple this adoption is going to occur. Nations cooperating with China has already jumped on the train with the yuan, and that is currently occurring. China's CBDC, central bank digital currency, and its implications are worth watching further as we move along these more turbulent times in the global economy and geopolitics. It's not just about practicality, it's a way to assert independence from the dollar. Thank you for watching my take on this topic. I want to hear from you. Do you think the US will respond to this move by China? Share your thoughts in the comments below. Stay informed, stay safe, and don't forget to hit that like and a subscribe button as we navigate through these turbulent times together.